Real estate doesn't happen without capital. And when you're investing in multifamily real estate at scale, that capital doesn't come from a single person unless you have millions and millions and millions of dollars at your disposal. So in this video, I'm going to walk you through what you need to know about raising capital for multifamily investing. So make sure you hit the subscribe button right now so you don't miss more videos about building wealth through multifamily real estate. I'm Seth Ferguson. Let's get right into it and talk about raising capital for multifamily. And for this video, I'm going to be covering three different segments. So number one, why raise the money, the benefits of raising capital. Number two, actually the funnel, how you go about raising it. Then number three, we'll be talking about how you actually deploy it in a very efficient manner in your deal. And this is everything we're covering at the Multifamily Conference coming up May 14th and 15th, pretty soon in Toronto. Go to multifamilyconference.ca to reserve your seat. We're almost sold out in the VIP and the Platinum section. So check that out. We've got some really top people coming to talk about this very subject. So with number one, let's talk about why we actually want to raise capital. And like I alluded to in the introduction, a single person doesn't really fund these larger projects at scale. So let's say you are an individual person and you have $1 million at your disposal, or 100,000, whatever it is. With 100 million, you're tapped out at the type of property you can acquire. So let's say you tap out at a $5 million property. That's fine. There's nothing wrong with that. But if you only pool the resources, the capital of many investors together, you're actually able to go out and acquire a larger property. And we've already talked on this channel in past videos about the benefits of scaling up. Not only are they more stable, you get better debt terms, you have better cash flow because of the efficiencies there. You're able to be more efficient in terms of management. Everything comes together under one roof, as opposed to having many different small properties scattered about. You can consolidate and put everything, 300 units under one roof instead of a couple different buildings. And that's going to make your business and your management a lot more efficient. Plus, the banks love lending on the bigger stuff. So rather than going after a 10-unit property, why not go after a 50-unit or 100 or 200-unit property, but you just have to raise capital to do it. Your investors are going to be investing in a better deal. You'll be working on a better deal. As opposed to thinking small, why not go bigger? So instead of working with $1 million, why not go after $10 million? Raise another $9 million, and that puts you into a much larger property. And we just talked about the benefits. So like cash flow, you're able to do some cost segregation. It just makes far more sense to scale up bigger. But to do that, you need to raise money. So this is why we want to raise the capital, because it gets us into a better product. Number two, we're going to be figuring out how we're actually going to raise the capital. And don't expect to go out and raise a whole bunch of money overnight. It just doesn't happen that way. So here's the funnel right here. So at the top of our funnel, we need something to attract potential investors. Now, who is your ideal potential investor? That's going to change depending on your niche that you want to target. There are some people who are very successful at targeting physicians. So they only accept money from physicians, and that's who they target. Because their method of attracting them is going to be different from somebody who's going to go after high-end accountants who want to invest in these deals. The attraction method is going to change, and these are also called lead magnets. So lead magnets, you can do whatever you want, but you need something to attract the attention of a potential investor. So when somebody contacts you, they're going to be a prospect. And what you want to do is you want to turn them from a prospect, a prospective investor, and turn them into what I call a lead. So what you're going to do is you're going to bring them into your funnel through your attraction method. Then you're going to qualify them. When you qualify them, you're going to be asking a series of questions and finding out, what they're after, what their investment goals are. And if they align, if it's a good fit, if what they're looking for and what you're looking for align, then that's probably a good fit. I would call this person a lead at that point, a qualified lead. Now, this person is not going to give you $1 million or $500,000 or $100,000 overnight just because you ask them a whole bunch of qualifying questions. So this is the top part of our funnel. We attract them, we qualify them, figure it out, because the whole goal is to weed people out as you go through. Now we have to build trust. and credibility. Well, how do we do that? Well, we have to showcase our expertise, talk about the past deals you've done, talk about trends in the market, what you do differently in your deals, what makes you special, why you invest in a certain area, what you look for in deals. Talk about your underwriting process. Now, this isn't in a single phone call. Maybe you have a snail mail that goes out on a periodic basis talking about a different point. Maybe you have an email newsletter. Maybe you do videos like this that explain your expertise and what you do and why you do it. This is what an investor wants to know, because really at the end of the day, all the investor cares about is, well, can I trust this person with my money, and will they perform like they say they're going to perform? Will the deal actually exceed expectations, or are they over-promising and are they going to under-deliver? That's what the investor cares about. Can I trust the person to do what they say they're going to do? And we have to build that trust and credibility, so by the time you actually have an offering at the bottom and you present the offering opportunity, you've already attracted them, you've qualified them, you've made sure it's a good fit, you've built that trust and credibility, so now they're all warmed up. So when you have that deal, you're ready to rock and roll. So this is the investor attraction funnel. It's fairly simple to do. It just takes a whole lot of work to make sure you iron out all the kinks in your funnel and really optimize it so you're rocking and rolling in terms of getting people into your investor database. Now let's talk about the third thing we have to cover, and that's how we actually deploy the capital. So we have the pool of investors here, but what's the most efficient way of putting that capital to work in a deal? And there are three different things I'll talk about here. I've gone in depth on these a whole lot more in past videos, so we'll put links right up top there. So the first way is to do a joint venture. So this is where everybody is active in the investment. So maybe you found the deal, and I'll put a link right up here to a video I did explaining about the real estate matrix, the 4 key components every single real estate deal must have, and you need all those components, and maybe they're coming from different investors. So for example, maybe in a joint venture, it's a 4-person partnership. One person finds the deal, one person is going to sign on the financing, one person is going to manage the deal, and then the other person is going to bring the capital. Everybody splits it a quarter each, and everybody's actively involved in it. That's a joint venture. But we'll cover 2 other passive options, because let's say we're talking about physicians. We're looking to raise capital from physicians. Doctors are really busy. They work incredibly long hours. They don't want to be active in a deal. They want to be able to invest their money, get all the cash flow benefits, all the tax benefits, the forced appreciation, the stability, the security that multifamily provides, but they don't want to work on that and start a second business. So this is where the second and third options for deploying capital efficiently come in. The one is syndication. Syndication, just real quick, we have 2 components, LP and GP, and I'll put a link right up here to a video I did going really in depth into what syndication is all about. The LPs are the passive investors. They're bringing the capital, and the deal is run by the general partnership, the sponsor, who has the experience, the track record. They make all the day-to-day decisions. And syndication is a great way to have people passively invest in multifamily deals like this one, the bigger ones. It's a very efficient way to do it. The third way is to launch a fund. And a fund operates like a syndication. We have a general partnership and a limited partnership, but the fund actually has a life of its own. So we have instead of investing on a deal-by-deal basis for a single deal, the fund itself will acquire multiple deals, and it will sell deals, it will acquire deals, it will expand and grow, expand and contract, and the fund itself is managed by the fund manager, and then the limited partnership, the passive investors invest into the fund. So their money is diversified throughout the fund. Like I said, I've covered this way more in depth in another video. I'll put the link right up here, where I actually talk about the differences between a syndication and a fund, and then I'll do the other one where it's a joint venture versus passive investing. But this is how you actually deploy it, and this is just as important as attracting the investors, because we have to be able to deploy the capital in a very efficient way, but also very safe way for the investors. So if you're just starting out for raising capital, you need to know why you want to raise the capital, and then how you raise it, get your funnel, and then you actually deploy it. And like I said, I've got some of the top people talking about this at the Multifamily Conference. We've got Joe Fairless, who controls almost $2 billion of multifamily real estate. He's talking about how to build a capital raising team and scale. We've got Joel Block covering syndication and funds. He is one of the top guys out there for this type of stuff. And then our other top speakers cover every single aspect of the multifamily business, from underwriting, management, financing, development, you name it, it's covered at the Multifamily Conference. So check it out at multifamilyconference.ca, but time is running out, so make sure you do that pretty quick. And if you like this video, if you found this useful, hit the like button, leave a comment, let me know what you think. It really helps out the channel. And until next time, happy investing.